Tonight we're into the gold market. Now, I'd love to know a few things about what you think of the gold market and where you think it's going. So I'd like to know a little bit. Are you bullish? And you'll get a little poll coming up in a second. Are you bullish? Are you bearish on gold? Neutral? And this should just come up now. Hopefully it'll come up on the screen. And I've got to save the changes and it should pop up. Allegedly, there's the things you can pop up on the fly. It doesn't look like we're going to get these polls, but give me an idea whether you're bullish, not bullish, no deflation is hitting, neutral, nowhere, bullish, bearish, don't know, neutral. Just type it in. The polls for some reason have decided to pack it in today. Life doesn't work that way. Don't know, bearish, neutral, clueless. Neutral, clueless. This is all good. Thank you. Thank you very much. A couple of bulls, a couple of bearish, a couple of don't knows, and cash is king, says Sarah. Thank you all very much for those responses. I'm all good with that now. Let's revert to talking about the markets. Now, we're looking at bull, bear, or nowhere, and at the moment I think I see a lot of nowhere responses. And that's always curious to me when we are trying to work out where the hell it's going and we don't know. It's just typical, isn't it, really? we have no way of knowing what's going on in the future, but when we're confused, we're actually in a good space. Why would we be in a good space? Can anyone answer me why confusion would be in a good space? Why is it good to be confused? And I'm confused because my computer's just hung. Can everyone hear? My computer just did the weirdest thing in the whole world. I have been hammering it pretty seriously today. That's what I do to the things. Let's see if I can get this back on screen. Why is confusion good? Won't trade if confused. That's pretty good, Andrew. Not everyone is on the one side. It creates opportunity, says Gary. Reduces appetite for risk. Thinking I'm correct is dangerous. That, Kim, is the best answer that I've heard so far, and you are really absolutely right on the money there when we're talking about that. The reason for that is if we think we're right, waiting on SNB. SNB, Gina, I'm not sure what that means. Confused buyers and sellers equals a market. Yeah, that's good, Rod. It's good. I don't know what you're seeing on my screen at the moment, and I think it's not what you should be seeing, but let's just get this up and running, see if I can swap this around and get everything working. There we go. This is a warning and disclaimer, and I'll switch National Bank. Okay, cool. This is general advice only, has been prepared by Global Prime ABN 74146086017 AFSL 385620 and Adesk Trading Proprietary Limited. Global Prime has made every reasonable effort to ensure the information provided is correct, but Global Prime makes no representation nor warranty as to whether the information is correct, complete, or up to date. That's the risk that you take when you do jump into the market. Your information is never as up to date as you'd like. You'd like the future. That would be good. We love the future when we're getting into the markets. And unfortunately, we just can't get there fast enough, can we? It would be very nice to be sitting in the future and go, I should have done this, I should have done that. That would get rid of all the would have, could have, should have. Our life is full of would have, could have, should have. And if we can should all over ourselves, and we often do. We have all these musts in our heads. We want to make money out of the markets, and that's why we put up the warnings. So to the extent permitted by law, Global Prime accepts no responsibility for any errors, misstatements, negligent or otherwise. The information provided may be based on assumptions or market conditions which may change without notice. Global Prime, its associates, officers or employees may also have interest in the financial products referred to in this information by acting in various roles. They may buy or sell financial products as principal or agent, or may, and as such may affect transactions which are not consistent with any recommendations. If any of these in this information, Global Prime or its associates may receive fees or brokerage for acting in the above capacities. This is general information not prepared for your specific investment objectives, financial situations or needs. Consult a licensed investment advisor before making investment decisions. Past performance is no guarantee of future performance. There is a risk of loss in trading as well as a potential for profit. The site is based on past historic data. It is about methods and education. You understand you have to do your own resource. Basically, that's the end of the disclaimer for the licensing. Under the licensing that we have, it is with Global Prime, as I said, and if you are interested in trading on a whole variety of different markets, there's this gentleman here is called Matt Kirk, and he's at matt.kirk@globalprime.com.au. He sends his apologies. He couldn't quite make it tonight, and he has some young kids he's got to deal with, and I think he's also been travelling, so he couldn't quite make it tonight. Helen says, can I have next week's newspaper? It would be lovely. Sometimes we get to see next week's newspaper, as you've seen. We get to see that advanced. Sarah, you're a Profit Hunter Group member. Sometimes we do get that feeling that we've seen the newspaper in advance, but it's not all the time. We'd love it to be actually really useful. So you can trade through Iris with Matt Kirk. You can trade shares. You can trade all around the world, and you can trade Forex through the MetaTrader platform. So talk to Matt if you're interested in picking up a new broker or just starting out. Now, we have many reasons to buy gold. The Perma Gold bulls are basically giving us many reasons, and here's one of them. This is I just did a little Google search to find out what some of these people were thinking. Here's some reasons to buy gold. Now, this gentleman, this was back in 2013, and I think you find gold was around about the 1300 area, maybe 1350, back on the 21st of June. In fact, it was around the lows. I was doing a webinar on the 28th of June, and I was talking about buying gold at that time based on the cycles. This gentleman gave the reasons around that time for reasons to buy. He said, I'm telling my friends to buy gold and silver. I haven't really had to time to explain why. This is a massive. I believe that gold and silver are seriously undervalued. He was actually correct for that week, and it ran up for about 4 months afterwards. I also believe there's going to be a crisis in confidence in the money we currently use, and this is the main reason they say that, which will cause a sudden and serious loss of very high inflation. Now, I think Sarah mentioned in here that deflation was there. So he also, and we're getting deflation. Certainly Japan has deflation. Certainly Australia has inflation in some areas and deflation in others. America's had deflation in a lot, or not very good increases in inflation, so they keep on pumping lower interest rates or money into the system through whatever it's called, the quantitative easing. Ownership of gold and insurance against this happen. It's an insurance policy. Unfortunately, it doesn't say that it's an investment. Once it does happen, it will be too late to take out that insurance policy. Now, when you think about that, that's a fear-based thing. It's not an investment, and we're really here about trying to work out where things can go. And I don't know about you, but if you want an insurance policy, wouldn't you be better off buying an option or taking out an insurance policy? Now, gold managed to go well higher during the time that quantitative easing was in place. They were debasing the currency. So here's some more reasons. They basically don't want to be part of the government money. And then saying law of supply and demand. Producing more gold or silver is difficult and time-consuming exercise. The amount of gold in the world rarely increases by more than 2% per annum. Now, we're always finding new gold, and that's cool, but we're also growing as a nation. So law of supply and demand, I don't even know whether that makes any sense, because most people, what do you use for gold? You buy it, the Saudis whack it underground in the desert and then look at it, and it costs them vast amounts of money to store it and keep secure. People buy it, and they buy it from the Federal Reserve in the US, and the Federal Reserve puts it in a system, and apparently the Germans can't find their gold or can't get their gold out. They'd like to get back. I've never seen any clear evidence of that, but there's rumours that that's happened. They can't find the gold that's there. It's expensive to store gold because you need a lot of security, and when you own a lot of gold, you've got to pay a lot of people to look after that gold so other people don't steal it. So law of supply and demand, what else do you do with gold? Use it in your teeth. It stays there forever, much better than silver amalgam. What else do you do with you will put it on your wedding rings as people get more population, you need more gold. So gold production does seem to satisfy what's going on in the world. Inflation, prices going higher. We look around, we see manufactured inflation, but we don't see real inflation. We see asset prices inflation in terms of artwork, houses. We see much more expensive cars on the road than there were these last 5 years. Why is that? Because we can now borrow at 0%, 4%, lease a car out, and suddenly, hey presto, everyone's got a Mercedes C-Class. They're the bottom end of the food chain these days around here. So risk, trying to mitigate risk. Yes, the fantastic thing is about gold is that you can usually negotiate it anywhere you like in the world. If you say we ended up in a terrible tragedy in Australia and we had the ability not to protect ourselves and people were coming in and taking us over and our currency wasn't worth anything, then yes, we want to own some gold. Until that happens, it's a little bit hard to think about owning gold because it's a heavy little bugger, and to lug some of it around is, you can lug around 500, you can lug around 1,200 $100 bills very easily, but picking an ounce of gold, a couple of ounces of gold, you can't put it in your back pocket too easily. When it gets to $5,000, $10,000, $12,000, it gets a bit heavy. So this is the headline: gold price, the world's wealthy are snapping up bullion. This is from Jared Lynch and Business Day in the Sydney Morning Herald. And what I've done here is I want to show to you the articles that people are producing and what they're doing, and so these are for how would you say, copyright reasons. I want to show you the articles, and there you've got the sources there. The 29th, James Lynch. Gold may be lingering at 9-month lows, but demand for the precious metal is growing among the super rich. That's because the super rich are growing in numbers. Life has made it a lot easier than this. And why are they buying gold? Because a lot of the rich are becoming Chinese. People are becoming rich are Chinese and Indian, and they like gold for cultural reasons. Asians as well like gold. Now, when you look at the headline, you think, wow, that must be bullish for gold. Since then, Erica's backing pink argyles. You've been doing that for a while, Erica, I know that. But, you know, when you're thinking about things, we look at the headline and then we read the body of the text. ANZ gold analyst Victor something or other said geopolitical tensions in the Middle East had strengthened the metal's appeal. Yes, that's true, but again, it's a heavy little bastard to carry around instead of money in your pocket. So people still prefer US dollars, and this gentleman here, he is saying he had a year-end target of $1,180, and he says most of the it's softer demand in Asia than it was last year. Why is that? Because we are still really they're still really interested in buying property around the world. They're still really interested in getting out of China, and so US dollars is the king where things move around. In fact, the Australian property market has a risk, and its biggest risk is a currency collapse, because the Chinese own US dollars and they buy houses with US dollars. Those are the ones that have got cash. The other ones that don't have cash are now going into Australia and buying, because Australia has easier credit than China. China has tighter credit on houses now. That's why the interest in Australia has come up, because you can put in less deposit. You can be more leveraged. So to the extent that the Chinese are leveraged, that the property market is at risk, and is also being scooted along upwards at the moment, or plateauing at the moment, and to the extent that they are moving and looking at their assets in a US dollar terms, they say, okay, US dollars, if the Aussie dollar property price goes down in US dollar terms, they've had a capital loss and they get scared. So be careful. If you see the Aussie dollar falling, you'll probably see this Australian Sydney and Melbourne property prices having a bit of a problem. So let's look at some fundamentals. The cost of production. A company will produce as much gold as it can sell down to where it is below the cost of production, and at that point it'll have to think about itself. What's the cost of production? I don't know what works, what the whole formulas are. We're going to have a look at some of the things people have calculated. So if you basically spend too much to get the gold out of the ground, then you've got some sort of failure. If you spend a little, then you've got success. So fuzzy mentals. So I'm going to show you some things. This is from Thomson Reuters, and it's saying here that the North American cost of production in the third quarter of 2013 was $640, down $40 an ounce since quarter 2 in 2012. So that's interesting. Latin America has $612 cost of production, up from $563. Australia, cost of production $868 in the second quarter of 2012, down, and these are all prices in US dollars per ounce, just to be clear. Australia, $750, right? So that's come down $118. South Africa, now this is mind-blowing. I thought they were pretty cheap. $971 an ounce US, come down to $930, but it bounces around there, and it did have cost of production $1,253. I don't know why that would be. Some people might know that better. Others, $815. So what it's come up here is saying production cost was as high as $1,000 an ounce, and $963 an ounce is where it was in the last calculation that we have had to date. Now that's now a year old, but let's say things haven't changed. So that's $400 an ounce clear profit on 13.26. It's also on 11.90, which I think the gold price is now at. I haven't looked at it this afternoon, but we'll have a good look at it in a little while. That's $200 an ounce. So these people who are sitting at 9.30, like South Africa, are starting to sweat a little bit. Sorry, $300 an ounce profit. People at 9.30 are starting to worry. Now, my question is, how does this work? Production cost $9.63, and here you've got all of these adding up, and they're not $9.63. So there's some numbers in there that I just don't understand, and I'd question. Okay, Craig, it's trading 11.88. Thanks. So just say this cost of production is on average 9.63, which doesn't make sense in terms of all these calculations. You'd think that it would be around about 800 when you average all of these out, really. So 800, 850, that sort of area. 9.63, we'll take it as read. When we pop across into the different world of, and this is from Gold Made Simple News, and I'm just pulling out these numbers, right? This is saying here, I don't know where the hell this was. No, I don't want a free report. Thank you very much. I just want to see what your little thing is. Okay, so we're going to pick up here. We're going to click here and see sharper image. So it's saying here all-in costs now of $1,211 back, and this is from Thomson Reuters again. So it's $1,211 made up of total production costs, which is this darker orange here, total cash costs, and mine operating costs. So let's just say this number here, which is around about 950. That makes sense, and it gels with that one. Gina is also saying CapEx isn't included many times. Well, that's fine. That is sad but true. So we see here, let's say $1,200 an ounce is what most people can get. Now we're below, as these people are saying here. Let's see if we can get this to come up quickly. No, it can't. I had these all nicely set up before, and unfortunately the computers then decide to die on you. I didn't want to just copy and paste their stuff. Let's see if we can get out of here. Bang. Well, anyway, articles started to appear in September saying that gold drops below the real cost of production, and this was in Zero Hedge. Over here we had very funny. Okay, let's see if that works. Yeah, here we go. I found out. Gold drops below the 1200 mark could mean cutbacks in production. That's basically it. What happens is, if you're not making money and your balance is $1,211, the Gold Mining Council is starting to say, below there, miners start to close down. They start to producing. Some of the lower cost ones then have a bit, who might have a bit of cash, can come in and buy the other ones. Ross is saying all-in costs usually include capital, head office overheads, etc. So this was where are we? Yeah, this is IB Times on February 4th this year. So things start to close down, and that becomes a problem. But it becomes more of a problem because capital costs, while they're long-run important, they are short-term insensitive. So they can wear it down to 850. Most miners would probably be able to wear it down to 950, 850, 950. Now, when we look at this, let's look at what the costs of production have been Does anyone remember when gold started its ascendancy? Gold started off back in over here. Gold started off basically, I remember it very well, at 200 bucks, thinking this isn't bad, and I bought some Lihir gold. Now, over here, it was around here when I got the Lihir. But what we can see here is gold down here. Notice here, the cost of gold, 500 bucks, around the $500 mark. This is a 2005 area. Notice that there is a correlation between the start of the bull market and rising cost of production. So, does there be a similar ratcheting effect as the market comes down? And when we looked at these prior charts that we, thanks very much for sticking your head in there, I appreciate it. When we look at these other charts that we saw here, where is it? We look at this one, we have seen gold coming down, and we have seen the cost of production sort of peaking in 2012 and backing off a little bit. So possibly the cost of production starts to get better as people look for their efficiencies and stop, like riding on the piece of gold's back, if you know what I mean, the bull's back. So cost of production is a rubbery target which we're shooting at, and people do start to make their investment decisions to not open new mines and stop producing stuff. So generally, cost of production is a limiting factor in how far down the price can be, but as I said, it's a rubbery figure at the best of times and hard to determine. So that's the reference to Google. So here's a quick checklist that I think you should be looking at for all of the people who are beginners, and bear in mind I am not a fundamentalist. I was an economist and I became a corporate treasurer and traded currencies and hedged currencies and hedged interest rates and managed large currency and financial exposures and some hedging for gold, for crude oil in my past lives, and worked for Macquarie Bank as well and trading anything that moved. So you want to check whether your stock that you're interested in is an explorer, a hedger. Is it an explorer, producer? Is it hedged or unhedged? Is it partially hedged? You want to check what their cost of production is in US dollars usually. You want to see what their management is, and you want to have a look at their mine life. So when you see me, for the people who are beginners, when I talk about where a stock could go to, I am not taking into account any of these factors. What you should do is have a look at them, and I will call for questions later. So have a look at those things before you make any investment decisions or trading decisions. The reasons for the bears, everyone digs it up and there's always people ready to produce it. Everybody already owns it, doesn't wear out, people are getting richer, government money is a much easier form of exchange. The US dollar seems to be still the dominant currency. Back in 2000, it was before, in 1997, the billionaires around the world, they have a little club, and they decided that the currency would eventually, in about 20-25 years, be the Chinese currency, because basically they saw China as having its shit together better than the US. That so far has not come to real fruition. Chinese government is still a little bit more, how would you say, sterner than I think the billionaires would like, so it might be delayed by 10 years. And it's also pretty expensive to stir. It's also communist. Let's look at some time factors in gold. This is a broad picture. What I do is work that is Elliott wave. I use some GAN. I do some forecasting. Some of the things I won't show you tonight, but I'm getting a little bit more complex here than I have for most of these things. But what we saw here on the last low was somewhat important. There are some numbers in there which are fairly big numbers, like the 1080 area that we've got here. I'm just looking at some cycles, and these are the swings back from 2004 of more than 21%. So I'm looking for when time factors are coming into the market. 72 weeks. Some of the GAN people will like that. Just below 72 weeks. So let's look at some price factors in here. What I also look for is a layering. Notice here that this is the 50% retracement, and the projection here on the low that we saw, 1132, lined up with being a ratio of that 50%, so that's the highs that gold has traded at. This is the 50% of the range, and those had, this is a little bit esoteric, it's more of a technical analysis, technical analyst thing, so those who are pretty smart in technical analysis, you might have a think about what I'm saying here. But you can see here that we have some good ratios on these lows that make this relate to the tune of 50% of that. So basically the range from there to there is the same. They're equal ranges projected down. Now we notice over here we see a 38.2% retracement here when that locks in, looking backwards. We're looking backwards here. So that was an interesting low, I must say. And I did say if it break 1180, we had a very fast, hard move to the downside, and then we got to think about it when it breaks back through 1180. So we're in that zone now. We've seen it come back. Now, let's look at the price factors in gold again. We can look back in a bit of history and see where things layered and where they lined up. There's a few lows over here. This area here is significant. It's also 50% of those ranges. Now, that's coming back to a GAN concept, not an Elliott wave concept. So here we see this important top. Now, I've been calling it down to as low as 1024. Some of my colleagues in the US have been, who are very good too, by no stretch slouches at all, in fact probably better than me, one of them. We find here that old top, and that's back from the 1979 high at 870. Now there are many different numbers on that, but what we see here is a question mark. This is important. We could say this was a wave 1, and we could say this would be a wave 2 maybe, and we could say this would be a wave 3 maybe, and we might be looking for a wave 4 here. That would be the question mark that we should have in our minds. If it is a wave 4, then it goes higher. How do we know it's a wave 4? Well, you don't, but you have your best guess. I think as long as it doesn't take out 1024, if it takes out 1024, then we're looking down towards the 870 area. If it can hold 870, then there's a possibility of a new high in gold. Why is that? I don't know. Don't ask me the reasons. Really, I don't know. We're going to go and have a look at a few more things. Now this is more price factors in gold, and we can see here all of this trading here was very confused. I told you at the time it was a big triangle, and if it broke this, we could expect 1342 on the downside. Who was some of those webinars that I've carried out in the past? Now, when looking down here, again, as I said, to the 50% of that range. Now, I'm going to tell you a little bit about timing in the markets, and probably this is more effective in the gold market. We can see here, these dates here are the highest score that we've seen. There was the 3rd of September, was this area here on the 3rd of September, and 31st of August, this clustering was an important time period. But we're looking forward from there. This is a projection and using these particular swings looking forward. And it said the big area is the 10th of December and the 26th of December for gold to terminate, or really at this point you can say this could be a high or low. It's a timing area of importance. 10th of December, 26th of December, and it's a projection forward of ratios in time. Here's another calculation off a different one, which was the August high. Notice that was a 2-month rally. This is the low that I did, remember the webinar I said where you buy gold down to 1182, and that was in end of June, and it got there the day afterwards, and then we bought it and it went up, and then we had also the dip down in December, but it rallied 2 months. Rallied exactly 2 months, which is somewhat significant. But notice over here when we take that and projecting forward from this top here at 1433 on the 28th of August, we start to see time factors coming in 10th and 11th and 12th, which confirms the other numbers, which was the ones that we just saw. Where are we? From the 28th of June low. So what are the big players doing? And this is something we should ask ourselves when we're trying to determine whether we're being smart or stupid in the markets. The big players, well, the commercials, what are they doing? The commercials are long gold. The sentiment is very negative. Now, as you can see over here, the commercials can hold on buying gold in dips and be happy. So it's a difficult call to immediately go out and buy gold once the commercials go bullish, because they can hold on forever. In this case, about 8 months. The sentiment itself is not so flash compared to the rest. Now let's get down to the brass tacks. What I just looked at was high theory, the things that I was showing you up to the point of the commercials. And when we drop down, we want to look at the seasonal patterns going on in the market. Now we've seen nearly a 3-week rally in gold. It's come back up to 1180. This is the area it broke down from and it had its sharp fall. So we notice that on a weekly basis, gold has not wanted to close below around about, I think it's 1160 area. And we can see here, in terms of timing, we're in a little bit of a spot where it can rally a bit, drop down into December, second week of December. Notice here there's a little bit of a drop, and then it gets a bit safer to buy. The question in our minds is, are we talking about a decently long buy? The answer is probably not. We'll probably rally into February and then drop down again. So I think there are safer cycles for buying in mid-December. On the flip side, what has been going up while gold has been going down? Let's look at one of the markets that has been going up while gold has been going down. That's called the US dollar index. So US dollar index has been going up, gold has been going down. US dollar index has been going up for 2 months. This is a weekly chart, and gold's been going down for a couple of months, if not maybe a little bit longer. So US dollar index, it's pulling back a little bit at the moment. We saw it dip down. Is gold going to keep going? Now we see US dollar index came back into support today, and it's now bounced. So are we just seeing the effect of just a correction in the US dollar index that is washed away? That's things in your mind. At the moment, it's coming into resistance. The 1180 area is important, and it remains to be seen whether it gets past it. So gold itself likes to top in the last week of November to the first week of December and drop down into second week of December. At that point, then you've got a chance for a run up into February that may be a little bit safer. Let's look at the bigger picture, and the bigger picture here is these are yearly charts. I've been taught to count the years. I've been taught to count, notice here, 1, 2 down, 3, 4, 5. It's about 5 months, 5 years down. Over here we've had 3 years down, so we're on the third year. And notice over here there's a big support back over where this gold top was and around the Fibonacci area. So if it continues to go down, that's where we'd be looking for. If it breaks that, starts to roll over further. But notice here on the weekly chart, on the yearly chart, volume isn't that bad to the downside. You'd think that that big bar would have much bigger volume. So this, on a yearly basis, is still corrective in nature. On a quarterly chart, we see a few other things that are coming in. We see this area here, declining volume. We also see a couple of triangles here, and I'll talk about those later, or a couple of ledges, you might call them this descending triangle. So we can mark out and say, above 1250 and gold's pretty good. That's a long way off, isn't it? This is the monthly chart. I hope you can see the silver one. You can see a little bit of increasing volume on the downside, but it's not dramatic. It's not like this. That was special. So we've still got low interest rates in the US. We don't have quantitative easing, but they are recycling whatever they bought over the last 5 years. As they mature, they're putting them back into investments in the bond market. So there's effectively their balance, the US Federal Reserve's balance sheet has still been relatively expansionary and including the interest, because they're going to reinvest the interest. So what we've seen here, triangle of confusion or a ledge, doesn't matter. Here we've got, you could almost call this pretty much the same sort of thing, same pattern. One of the things in Elliott wave is the rule of alternation, and this pattern's violated. So this is the suspect wave count, and if you were a counting person and you were a mega bear, you'd say 1, 2, 1, 2, 1, 2, 3, 4, 5, and then what that would mean is, this is on gold, on Comex gold, and you might find that it might go up here and then do this, and then go down for a fifth wave around these old tops, and then you get a correction back up to here, A, B, C, and then you get another bigger move down. That would be the theory. Now I'm moving quickly. I'm sorry for those people. I've got to move quick. I'm trying to explain it. But this is more a better wave count. This would be calling this area here a B wave in this little calculation, and this 1, 2, 3, 4, 5, and this would be a C wave. So we've got to carefully watch this prior low over here. We've seen a fourth wave, we've seen a fifth wave. We're in a zone where, yes, you should be buying gold for a couple of months and looking for reasons to buy it with stop losses, and be careful. So if this is an ABC pattern, the implications are, and I'm not saying I'm wildly bullish, but one step at a time, the implications are that you can see this sort of move, and then this sort of move, and then this sort of move. And then those people who have been yabbering on about gold at 2,500 would be good. But you can see here this movement is corrective. We're going to look at a machine and not my own wave count now. This is a machine count. And I'm talking about gold itself. I know some of you are asking about gold stocks, and we'll get to those. but I wanted to drill you in on the whole picture. Notice here, this is a machine, it's unbiased, it's not got my head in it, it's got its own head in it, and it's taken the area back from since basically 1975, the low here. It's calling this wave 3, and it's actually true because gold used to be $35 an ounce for about 50 odd years, I think it was. Might have been 40 years. But $35 if you take into account that as being wave 3. It says this is wave 4. We're curious what's going on here. Wave 1, wave 2, wave 1, wave 2. Next one up here would be wave 3. Then you get a fourth wave. Then you get another wave 5. Sarah, are you saying the same thing? I'm seeing on a different machine, different ISP. One's Telstra, one's Optus. I'm seeing the chart's okay. So maybe it's your buffering, Sue. So that would be going higher. Let's have a look a little bit further. We see on the short term. Oh, sorry, I was seeing Sarah and Sue, and ladies are much more chatty than the gents here. And Craig's saying its chart's fine. So what we can see is this pattern here, and this is the wave count. Now this machine here costs about $2,200 US. If you're interested in that, I can get a hold of that for you. It does wave counts. If you're interested in a wave, fantastic. Just give me to David at thedesk.com.au if you want to get a hold of a trial of that. But what it's saying here is that it believes that this whole pattern is corrective. This is corrective. Why is that corrective? Because this is impulsive. This is exciting. And this has been falling all over itself. And it may come back down to 870, it believes, but it's more likely that the 1130, 1140 it believes is important. So here it will be still bullish until it gets down into that zone. So, quick broad brush. Gold is useful on a close above 1194. There is a bigger area above 1250 that would be useful. We've had a 3-year decline in gold. It is down around the right areas, give or take $100 or $200, where people will restrict the production if they are economically sensible. BHP and Rio, they have lower cost of production than anywhere else, and so they've just been smashing iron ore down and not caring about the consequences for anybody else. So if it breaks down, then you can expect 1092, not necessarily 1100, but 1024 or 870 if it fails, if it falls below that. Now, in terms of the gold index, we haven't looked at that yet for the Australian market. February would be the top area, and we might be looking for a decline into March, April before a potential takeoff. What do I mean by that? I mean we can get bullish now till February. Destruction in March, April, I don't know of what magnitude yet, but then that's the time to get set for a generational buy in gold again. Maybe by that time Janet Yellen says, oh bugger it, I'll just write as much checks as I can. You know, the last person with no arms, no eyes, no legs, half a brain cell left, and no voice, and he can't hear, and they say, Janet Yellen, oh really, I really need to get this guy a job. I'm going to just have to do more quantitative easing. That's the sort of way that she thinks. She's very socialist. We have 2 more years of socialism. So March, April next year, I think is the time to get set in gold for the long run. At the moment, I think it's okay to look for reasons to buy over the next, basically in mid-December, second week of December. Start to look for reasons to buy for rally into February, decline in March, April, and then a big potential takeoff. Now, that begs the questions, what are the gold stocks in the last stages of decline? And the first one, we've seen AGG, Alkane, the gold index itself, AYA. Craig, I'm saying you buy with a view of the timing and you put stop losses on at the appropriate point. So below 1010, you have your stop. If that gets taken out, then you're looking down towards 900, 850. At the moment, we're in a phase where for the next week or two, you'll probably see it go up. Then it'll top end of November, drop down into December, first 2 weeks, and then get strength. That's if it's a normal market. So that's the way I think the game plan is. Saracen, SGZ, that doesn't look like a right code to me, and SLR. Now, SLR is the perennial basket case. Let's look at SLR. Now, Sarah, there's a gold stock which I wanted to analyze, and it's the one that we've been in the Profit Hunter group. We've been looking at it, and it's been a very strong one. If you can dig that out, I would really appreciate this. Now, let's look at SLR. It's going to where it came from whence it came from, and that was down around 13 cents. That was the low that it was. You've seen that up to $4. This one, you'd have to think, and it possibly is because it was such a star that the management got fat and unhealthy and bloated. But I could see this coming back to 10 cents. A lot of the projections I've got go down below zero, so I'm probably more cautious about Silver Lake than any other thing. So I'm not that keen on it on a longer term basis. I have to see some shifts, some serious shifts going on. Now, on a shorter term basis, you can see a struggle street pattern here. It's struggling to go to the downside, but the problem is it's probably got some cash left, but I don't know what its cost of production is. I'm not sure what it likes to do, but the only time I would consider buying this on a longer term basis is if it clears 50 cents and then buy more above 64 cents, hoping for $1.36. But SLR, not the top of the pops at the moment. Again, on the weekly chart, we see no good life. On the daily chart, we see a double top in a downtrend and more likely going to get knocked again. The overall trend is still down for SLR. It may be coming to the end in the next leg down, and but at the moment I cannot fall in love with SLR. And no amount of PHG members have been a little bit upset with me, I think, thinking that it should be buyable, but I can't see reasons. There's maybe 8 cents or 13 cents, that sort of area to look at if you're an investor. If you're trading it, even then, maybe it gets above 41 cents. 16 cents is the downside if you're on a shorter term basis. You'd think about it down there. 16 cents, but again, exhibiting extreme signs of weakness. Yeah, NST, there was another one though. There's another one. So we'll look at NST, and this has shown some good signs of life. It did get in close to some important areas, and it's bounced out of all of this junk. You can see the rubbish that it fell into, and it's resurrecting itself. I'd like to see it close out the month above $1.05, and this is the stock we've been keen on in the Profit Hunter group. and we can see on the weekly chart the volume has been uninspiring. Actually, Jim, you're right. I think it is OBS. A dollar. I was searching for it in my brain. I didn't have time to search for it. No more questions. I haven't actually called for questions yet, people. So, but we can see here NST is still sitting there at $1.23, something like above $1.23 starts to get a little bit healthier. But it is one of the ones that is of interest. At the moment, I still can't get into it. I want to see in the dailies how much the volume was today. Volume today is okay, but you probably see $1.20, $1.30 if you're lucky. If you are buying it, your stop is at $1.08 now. So OBS is the stock. Jim was saying, because he's a PHG member too, and he's saying it's one of the ones that has come up in dispatches. Yes, it is OBS. Orbis Gold. I think that was your question actually too, Jim. So Orbis, it's been strong in a declining market. Now, for what reason? Maybe it's they're finding new stuff. Maybe it's also that they're finding better ways of producing their things. What we have seen is it's been a bit muted while the other ones have been better. Oh, Andy's saying it's a takeover bid. That's one of the good things about the PHG group. There's a lot of very smart people in the group. A lot of these people that I'm mentioning are actually professionals in the market. So they keep on top of a lot of things too. There's a lot of information in the group. So we see the strong move, and this is a little triangle. So as long as it's holding above the 42 cents area, I think you've got a possibility of towards 90 cents or $1 again. So OBS is good, and possibly even when gold drops next. Yeah, 97 cents to 86 cents on the top side. We can see it churning a bit, and if you're looking to buy this, you buy a break above 61 cents with a stop loss below 49 cents stop close only. We can see volume. There was a bit of a hit on this week, but overall volume is sort of drying up, and a further kick, if it doesn't go into churning, will take it higher. So the takeover bid is I guess it gives you, and where's the target price there? Andrew? Dropping down to the dailies, we'll just go into that. It's not. You can see it pulling back on light volume, 60 cents. So 60 cents is here. Maybe it does churn around there, but think about it on that break. So if it busts through 63 cents, look for higher levels. Okay, thank you. Okay, next one. So we had a look at SLR. SAR, which I believe is pretty well hedged according to management, has not been, the market's not believing that the hedge is important. How far out is the hedge is the next question. Now we've seen Saracen overlapping pretty seriously, and these volume was good on the upside, not that heavy on the downside. So we could call this a bigger congestion area, and I would say your buy zone is about 15 cents to 16.5 cents, and probably the headbutt zone is about 40 cents. It's going to be difficult getting above there, and if it's getting above 45 cents, then that's healthy for 62 cents. Now, there have been a couple of questions come in, but we'll just have a look at a couple of the other ones. These are gold stocks in fourth wave looking for more down. SLR and SAR. So that lines up with the congestion area that I was talking about. GOR and BDR we'll have a look at now. BDR has destroyed itself below 50 cents. That was pretty critical. The good thing is it's lobbed into 20 cents area, which isn't bad. So if you want to do some dagger catching, down here with a stop below 18 cents is pretty good, and you might look for a rally towards 49 cents if it gets some traction. So dropping down into the monthly charts, we see a bit of a slowing this month, a little bit of a doji of confusion, and we're seeing on the weekly charts probably a fourth wave pattern emerging. So you might get one press more down towards 20 cents. If you wanted to buy it, you buy a break above 30 cents. We have an even stacking signal which would cause for that rally to 38 cents or at best 50 cents, full stop. So if you're buying it on a break above 30 cents, stop would be below 22 cents, looking for 38 cents, possibly 50 cents. So BDR feels like one more down. I don't know where my volume went on this chart, but let's pick it up on a weekly over here. So BDR, heavy volume. So at best to rally back up to 50-51 cents. That's where I think you'd find it getting back up to. So don't get too excited about it. If you pick a bottom on the next decline, safer buying is a break back up above 30 cents. We won't look at the daily charts because this is a bigger perspective. I'll leave that for the Profit Hunter Group members in the morning, where we'll really pick it apart. Okay, so that was BDR. The other one that we're looking at was GOR, and I think I haven't done that. No, I haven't. So this is Gold Road. Let's look on the monthly basis, and we see the monthly basis, it's had a nice couple of month decline and it's holding some support. There's definitely some support holding. So if you're wanting to go in on this, it's something to put in the pipe and smoke it a little bit, especially above 30 cents. At the moment you can be buying dips down to 20 cents, stop loss below 15 cents if you're trying to pick it up as an investor. On there, if you're an intermediate player and looking for, Gina's saying there's a big raising at 30 cents and there's an overhang, and that's exactly where I think you'll find it if it clears through that 30 cents, and I didn't know there was a big raising there, so I must admit to being a dummy in the capital raise sort of thing. But through that 30 cents would start to look pretty good. It's retested a lot of support and showing okay signs of life. I do want to have a quick look here and have a squeeze out where some ratios are at. Yeah, above 30 cents is good. Shorter term, a break above 26 is not bad either. I just prefer to see this churn a little bit. The volume is not that disturbing really. Churn a little bit and then see how it can pan out, and a close above 27 cents. You buy some with stop below 20 cents. Short term hoping for it to get to 30 cents and then break through 31 cents. Okay, now there's a stock in there called MYG. And sometimes on this data set, those small ones don't show up, and it has. That's fantastic. Okay. Mutiny is just groveling. It's had a couple of goes up. There's no doubt about that. It's trying its best. Yeah. Pretty well something above 6.3 cents. I apologize for my big figure errors. A buy above 6.3 cents. If you wanted to sneak in a buy above 4 cents, that would be a good idea if it breaks above there. A stop would be below 3 cents if you did that. Dropping down on the weeklies, we don't see a lot of reason for getting involved in mutiny at the moment. And on the dailies, we just see fly specks and chicken scratching, so not in love with that one there, Craig. But yeah, wait for a show of strength. I want to do nice try, Sarah. Yes, all right. I'll have a look at OGC. And why can't I see it in here? Okay, here we go. Capital raising in DUE. Okay, Gina's the capital raising expert in the room. They're all needing money. It's surprising, isn't it, really? Gold's going down, they need money. That's why a lot of your fundamental guys won't touch your gold stock. So you want to really appear at. No, not talking about Gina. If I'm assuming DUE means the stock DUE, not another stock you're referring to higher up. So OGC, we see OGC really stuck in the range. So it's exhibiting some strength, really. What I think is a stop below would be, oh, okay, MYG is due to raise. Okay. So just mutiny is due to raise. So $1.66 would be a stop if you're thinking about buying this, and a close above $2.50 wouldn't be a bad spot to do that on the monthly basis. We can see it's dropped. This is monthly chart, and again above $2.53, that sort of area also coming out as important. We see a bit of a rally here on the weeklies. And I want to do it. I want to do a wave count on that one. Because now I'm getting peppered with questions. I'm trying to not answer them all, but it's just, yeah, it's my computer's exploding too. Okay. Okay, there seems to be a whole interlinkages. Mutiny Gold has DRM in 5.5%. Let's just not go too much into the capital raise stuff because it'll blow my fuse. It is 10 o'clock at night. So we see OGC. Let's see what we see on the chart. We see there's OGC, this mutiny. So of the ones we've looked today or tonight, OBS does look like one of the stronger ones, particularly if gold starts to drop again. Maybe it's very hedged. You've got to check the books of it. This is Mutiny Gold. It's just too much chicken scratchings. And let's look at OGC on the volume. OGC has okay volume. It's not sensational, and you'd be looking for $2.50. As I said, above $2.53 is important, and $2.27, that sort of area would be useful to think about if you're buying it. If you are going long, stop below $2.04. So now, just quickly, I won't run a count on these ones. I want to have a look at evolution because I've done a few things on that. We see evolution, EVN, and it's been cutting back in a corrective phase. Notice there's actually 3 bottoms around here. Now, if it can start resurrecting itself above the 75 to 79 cent area, then that's healthy. That would be the buying opportunity. At the moment, sitting around 53 cents. This little area here, you might want to, if you get EVN down at the 49 cents area, you might just want to nibble on some and see how you do. That would be a nice little dagger catch down there. Stop below around about 44 cents. You'd particularly get excited if it broke above 60 cents just after doing that. And again, we see 49 cents coming up as useful. So I wouldn't bother about it unless it broke through 78 cents or dipped down to the 49 cents, and then you have a tight stop loss. So that's hoping that the little shakeout is the final one. The way to do this is a trader's trick. If you nibble down here, then you could buy more on the break back. If you don't want to nibble there and you don't want to get run over, then you buy only on the break back. So that's evolution. And again, check to see whether they're explorers, check to see whether they're got decent cost of production. Here's a RRL. Now RRL, you'd think needs to hold really above $1, otherwise it's got some problems. Now a lot of these charts are a little bit scrappy. What I can say is if you broke back through this midpoint here at $1.75, it could be interesting, and then you buy more above $2.08. If you bought the breakout, your stop should be around about the $1.50 area. We're looking here at Saracen on the corrective waves. As you see, it can come back down to 10 cents, maybe 15 cents, still be in this wave 2 correction before it has a chance at going higher. From the people I know who speak to management, I think they're supposedly pretty good. Now we see the decline here, possibility down towards 18 cents. This is SLR, and we've talked about that before, and we've also talked about 8 cents or 9 cents. So SLR, can't fall in love with it at the moment, needs to get above 40 cents and then 50 cents to get really healthy. Now, turns out I'm on Sky tomorrow night. Well, Sarah, if it was very light volume and we got the shock, I think you should be waiting to see the US, how they're moving now. We're not going to look at the. I want to focus on the gold stocks. We'll do the Aussie stuff on those ones tomorrow night at 9 o'clock, 8 o'clock, I think. Yeah, it's 8 o'clock. Get confused because they shift around the time, or they've done it. They shifted it once. Anyway. Newcrest. Newcrest probably forming a bigger triangle on the monthly charts. Now what we can see here is that Newcrest, I did think we could get towards $15. That is still a possibility if we can hold in this triangle for a little bit longer. Up there, it's probably a decent sell. It has struggled with the $12 area really a lot. So caution being long NCM. When we drop down onto the monthly charts, we see a little bit of pickup from where the low was the other day. But all in all, it's trying to go short, but it's not quite there yet. On the daily charts, it keeps on trying to hold $10, then it breaks below it, then it tries to get above it. You probably think it would do another $10 stint. Not a very hopeful day. We can see that it really needs to get above $9.80 to be truly gorgeous and lovely. Now, I will quickly look at the S&P 500 for you, Sarah. Thanks, Robert. We can see this is rolling over, but they do that all the time. They do it every Monday. They make you think that it's going down, and it breaks down and doesn't go. It's not the biggest trade that the currencies are, but it's pretty big. So it's second biggest, I guess. The bond market's also pretty good too, Craig. 10 years, 10-year notes. So we can see here it's popped back up. It hasn't shaken out, Sarah. So I'm not that bearish unless the Americans let it go. We see here. You remember my targets, Sarah? You all remember my targets. I don't need to repeat to you. 53.68, 53.80, that sort of area. 53.86. So not really that fast. I'm not that. Hey Paul, how are you? Okay, now seems like everyone's in the room. A few people are needing to go to sleep. That's okay. I do this for my Profit Hunter Group members all day. A lot of the Profit Hunter Group's members are self-managed super fund owners. They are looking on a long-term basis, and a lot of them are also professional advisors, professional fund managers, professional money managers, and financial planners who ask me all day what to do in the markets like this. Now, crude's a bit off topic, Craig. I already slipped here. I already slipped in discipline. So what are we doing in gold tonight? Now gold, as I said, that 1194 is important, and I wanted to have a run through some platinum and palladium. We can see here it's hanging in there. Gold's done this a few times before. It's come back up to resistance, and this is an classical ABC pattern as it is at the moment. Let's look on the drop down into the shorter term time frame if the data will let us. We can see it starting up. So I would say a pop to 1207 would be feasible, but a failure up there is possible. And above 1210 we start to think things are good. Okay, and so I do take applications for people who wish to become gold members of the Profit Hunter Group. If you are interested in becoming a member of the group, what we do is we do an interview process, and I talk with you, and we talk together. And if you go to profithunters.com.au cart, if you wish to become a silver member gets everything that gold members have on recording and get their answers through. If you look at those, you'll see the different membership levels. And if you're wish to become a gold member, you need to have an application form, and there is a discount for people who are here tonight and you call me tomorrow. Maria, no Aussie, like I say, no, please, no outside of gold stocks questions. I need to limit that. We've got about 10 more minutes to go and a little bit more to cover. So Perseus or Perseus or whatever it's called, we see here that's not interesting. It's still weak. Strength would be really above that, in the shorter term, really above that 51 cents area. That's probably better on there. Still not a lot of life on the rally. And dropping down a little bit closer, we see still not a lot of life. Now Spiro, is UML a gold stock? Unity Mining. Okay, we haven't looked at that for a while. Now, I just hadn't heard of it. Pattern-wise, I think it's going to spend a lot more time going sideways because that's what it's really done for a while. And again, I'd check to see, is it an explorer or is it a miner? It says mining, but does it explore mainly or does it mine? Now this little fella, down towards 4 cents, is it mainly an explorer or mainly a miner? Because I'd suspect it's probably mainly an explorer from the way the chart looks, and it could spend a lot more time going sideways. Okay, MML. We see Medusa. There's no need to be in love with that as far as I can see on the monthly charts. No need to be in love with that on the weekly charts either. You said that numerous times there. Okay, now let's shift back. I'm sorry, there's no more questions. Okay, so this last question, we looked at Gold Road for you, David. This is from the Profit Owner Group member. Also, I'd like to hear your comment on the Swiss referendum on the 30th of November to restore their central bank bullion position back from 20%, back to 20% from 8% of total assets today by 2019. Number one, 2019 is 5 years. That's a long way away. A yes vote would mean they'd have to buy about 15,000 tonnes of gold at a cost of $56 billion. It's a fairly big check to write, would you not think? Now, do you think that Swiss people would like to have that? Now, it's about 7% of world gold demand and 20% of world's production. I'll take your word for it, right? So, would it trigger a 18% rally? Well, you've got to think about this. World's gold production 20%, another 5 years, so that's 4% of the production each year. So it's not as big an effect over the time. So that to me would be something that probably I wouldn't be that, you know, it's a factor. Maybe that's the reason we're getting the rally at the moment rather than anything truly, really important. It would be nice to see central banks needing gold to back their currencies. The Swiss may be more likely to do it, but remember the ethnic composition of the Swiss and their demographics are changing a fair bit. So the people who are voting may not be exactly the same that you would expect as conservative Swiss. They've got some issues. I think you can't even get a 4-story building in Switzerland. They're talking about that. So the Swiss National Bank, yes, it's interesting. Yes, it may add to demand. If they start it though, and it's not come from, it's also not been generated by the central banks. If the central banks didn't have to do a referendum, they might be easy to get it through all the time. I don't know. I'd say that that's a factor that would add to bullishness in the longer run rather than right now. In the medium run. Right now it might be a factor for a bit of a spike into the 30th of November. Notice that's around my time of the date where we should expect a top. So maybe they say yes, maybe they say no, but whatever the result is, it may mean gold tops out, drops down for a bit, then you get the real buying opportunity. So we looked at OGC for Kevin, and KRM we did not look at. So let's have a squeeze at KRM, which is King's Rose. These are all questions with it. Notice so I need to answer them. We again see this is fairly like the gold chart. The only thing is, gold chart hasn't fallen basically 80% of its range, hasn't really. So you should be looking for this round about the 18 cents area if you can get there. stop below about 16 cents. That would be the longer term pickup area, or a bust above 45 cents. Again, we've got a little bit of, we've got the triangle action up here. You'd think it was better than I think it is currently if it gets above 38 cents. And then you'd look for a run towards 42 cents. Next one is KCN. We look at Kingrose, we can see, sorry, Kingsgate consolidated. We can see a little bit of a struggle street pattern coming in. It is having trouble going to new lows. That's because it's just been destroyed, I guess. Kingsgate issued 1 trillion shares, so it needs cash. I haven't been in love with this for a while, and probably the best thing is if it gets above $2, you get excited. At the moment, you can't get excited. At the moment, you can't get excited on the monthlies, the weeklies. Above 82 cents might be a little bit exciting. And the dailies are okay. Dailies are okay on a bust of 70 cents, looking for 81 cents. Stop below 61 cents. After that, not so exciting. Melius, same problem. Death is probably possible on Remelius. You'd look at the fundamentals, but it's probably got death about it. See this rally today? No volume. You'd need to go through the if you're long, stop below 42 cents. Okay, now that looks all said and done. So we've done the questions. Where the conclusions are, at the moment, yes, there is a bias for a little bit of a rally. The gold stocks, Australian gold stocks, you've got to be really selective because some of them are going to disappear. If you have got a takeover attempt like OBS, then that gives you a bit of a put option on the share, so you might want to go with those ones. Gold stocks that are of interest are NST, OBS, SAR, Saracen, when it gets down to between 10 and 15 cents. Now, it is what I thoroughly believe that the markets are getting better. They are more returning to normal. I have seen more normal price action for a long time. If you have been out of the markets and have been scared, there are a few things that I will talk about in my 2015 forecast, which is coming up next in the next 2 weeks. I'll be doing that, the big 2015 forecast. There's a few things that lead me to believe that the people who have left the market should be getting back in. If you've been out of the market, who here has been out of the market for a while and not interested? Raise your hands if you've been out of the market, not interested. Yeah. A lot of people have been out. And the reason that I think it's going to be a good market is because a lot of people have been out. And there's going to be some good runs. We're just getting ready for those. So look out for the 2015 forecast. That'll be on a Monday night. I suspect it'll be on the following Monday from next Monday, and we'll get it all set up for you and look forward and see how things will be going. Thanks everybody. You can buy gold stocks on dips with a tight stop, but pick the right stock. If they're not got a good cost of production, don't take it. If they have got some bad management issues are if they do need cash, don't buy them because you're going to get crushed. Okay, so it's selective gold stocks. Selective gold stocks. Gold itself, wait till middle of December. Thanks everybody, have a great night, and thank you all for coming along. If you've got any questions about whatever, Profit Owners Group. Also for the people who are interested in the in this SMSF, I also have a product which is for longer term investors. It covers about 20 or 30 stocks on Monday, Wednesday and Friday. It's a sit down, read the newsletter report. It's called the Australian Shares Report, and it's for longer term investors. And what I'll do is for anybody who becomes a Bronze Profit Hunter Group member or above, I will throw in an Australian Shares Report valued at $997 for the year included, bonus with bronze. So that's bonus with bronze membership. And that's only for the next week or so. Thanks, Stephen. I like that one. Stephen said Swiss Gold is buying anything to do with covering for Roger Federer's retirement. Danny, because you're a past Profit Owner Group member, what I'll do is I'll give you access to the recording on Platinum for that comes out tomorrow. Just email me, and because I'll be doing the commodities trading webinar tomorrow. We'll cover platinum, gold, and silver. I've just run out of time, so if you need that, just email me, david@adesk.com.au. Okay, thanks everyone. Have a great night.